Welcome to Global Dispatches, a podcast for the foreign policy and global development communities and anyone who wants a deeper understanding of what is driving events in the world today. I'm your host, Mark Leon Goldberg, editor of UN Dispatch. Enjoy the show. Cryptocurrencies have a terrible reputation that is often richly deserved. Many cryptocurrencies on the market today were literally created as jokes, and others, like Bitcoin, are fueled by massive energy consumption. If Bitcoin were a country, it would be among the top 30 energy users in the world, nestled below Norway and above Argentina in terms of total energy use. But the environmental hazards of Bitcoin and the irresponsible hyping of so-called meme coins by celebrities like Elon Musk belie a broader trend in the ongoing development of cryptocurrency. Recent technological breakthroughs are enabling the creation of entire financial ecosystems where they previously did not exist. This has big implications for the business of global development. Indeed, many of the most innovative blockchain and cryptocurrency projects today are being built in the developing world, Sub-Saharan Africa in particular, to address real-world obstacles to economic development and achieving the Sustainable Development Goals. So far, the technological achievements that are enabling this use of blockchain technologies and cryptocurrencies are being heralded mostly by an insular community of mathematicians, computer scientists, and game theorists who have built these systems. But as more and more of these systems come online, the broader global development community, including donor governments, the United Nations, NGOs, and philanthropies, will have to confront the implications of these technologies for their work. And that is where my new podcast series and accompanying newsletter on cryptocurrencies and global development comes in. If you are listening to this, chances are you have a keen or even a professional interest in international development and foreign policy. You are probably not terribly familiar with terms like decentralized finance, tokenomics, or even what we mean by blockchain or distributed ledger technology. And that is totally okay. This is pretty new stuff. This newsletter and accompanying podcast series will help you navigate the world of crypto and the opportunities it presents for the broader global development and international affairs community. Today's episode is freely available to all and provides a brief history and introduction to cryptocurrency and blockchain technologies and the implications it holds for global development. Future episodes in this series will be available to premium subscribers. To become a premium subscriber and gain access to the cryptocurrency and global development newsletter, please visit patreon.com/globaldispatches. You can also follow the links in the show notes of this episode and on globaldispatchespodcast.com. A paid subscription includes access to premium episodes of the podcast in which I interview pioneers in this space. I will introduce you to a Burkinabe social entrepreneur who is creating a blockchain platform to securely register land ownership in rural Burkina Faso, where land titles are rare, so farmers can collateralize their property. You will also learn from an OECD expert who explains the huge promise and current limitations of using crypto for cheaply sending remittances. You'll hear from a Zimbabwean fintech executive who is leading a social impact crypto project to provide cheap mortgages and rent-to-own opportunities in Mozambique, among many more episodes to come. And in addition to the podcast series, subscribers to the newsletter will also be able to have their questions about crypto and global development answered. This newsletter is intended to be a conduit between you, the global development and international affairs aficionado, and this brave new world of crypto, blockchain, and decentralized finance. You ask the question, and your paid subscription to the newsletter and premium podcast series will support the journalism necessary to find the answer. So that is my hard sell. I'm excited about doing journalism around this really emerging topic. Again, please visit patreon.com/globaldispatches to become a paid premium member of the podcast and get access to this series. And now on to today's episode. My guest, Garry Golden, is a trained futurist and someone on whom I've come to rely for measured analysis about the opportunities and limitations of blockchain technology and cryptocurrency. We kick off by defining some key terms and briefly discuss the history of blockchain and cryptocurrency. We then have a broader discussion about the implications of cryptocurrency for global development, and this includes a discussion of remittances, access to capital, banking the unbanked, digital identity, secure property records, and even the potential that countries in the developing world in the not-so-distant future use cryptocurrency in the issuance of sovereign bonds. This is an absolutely fascinating conversation, and though many of these developments are largely off the radar of the global development community, the trajectory clearly points to a future in which cryptocurrencies and the blockchain technologies they power may be productively harnessed in the service of sustainable development, and probably sooner than we think. As Garry Golden explains, the technology is there. Anyway, here is my conversation with Garry Golden.
The simplest definition of a blockchain is that it is a distributed database. So that's the definition. And whenever I give that definition, I like to compare it to trying to understand, let's say, the internet by defining it in 1993. We may have said, oh, the internet is networked computers. And a person would understand the definition, but not really be able to imagine Google, Facebook, Uber, Airbnb based on that definition. So by definition, a blockchain is a decentralized or a distributed database. The question is, what can't we imagine will come from such a simple definition?
So what is the relationship, therefore, between cryptocurrency and blockchain?
Sure. So a blockchain is a decentralized database, and cryptocurrencies are digital currencies where transactions are verified and records are maintained on that decentralized database. So in many ways, cryptocurrency and blockchain are coupled together, but it is possible to have a non-cryptocurrency blockchain application. Though the two really are just kind of, they're wedded together from now and forever forward.
Well, let's kind of maybe go back to the history of this technology and where it all began. I presume, it's the story sort of starts at the advent of Bitcoin. Can you kind of take us back to that?
Yeah. So there were numbers of attempts to create kind of digital gold and digital currencies through the 80s and 90s. And then the seminal moment was the release of what is referred to as the Bitcoin white paper 2008. And it described its version of this kind of digital currency that would be secured through this peer-to-peer ledger, which would hold the ownership asset records and the transaction records on a peer-to-peer managed network. And that creation of Bitcoin was the beginning of, what we would call kind of the modern cryptocurrency movement. It was the solution that stuck and gained the widest support.
Bitcoin obviously is the first thing people think about when they think about cryptocurrency. But my understanding is that Bitcoin, compared to other newer cryptocurrencies and to newer iterations of this technology more broadly, has rather limited utility, right? The ledger that maintains Bitcoin can be used to record transactions, and those transactions can only really involve sending or receiving Bitcoin. But a couple of years ago, you've had the advent of newer technologies which can layer applications on top of this ledger that you described, this blockchain.
Correct. So Bitcoin really is banking without a bank. So you can send a form of value, receive it directly from another person without a third party, and that is revolutionary. but the ability to run, as you say, applications, so something for that is a distributed healthcare record or a distributed identity record, that is not something that we would ever really be able to do at scale on Bitcoin. So in recent years, we've seen the emergence of kind of next generation blockchain cryptocurrency projects like Ethereum and Cardano. And these are platforms and communities that are trying to think a little bit more broadly in terms of what does the world need in terms of decentralization, and that is really moving not just around value of a cryptocurrency, but around things like identity and governance. How do we decentralize those facets of society? So we're really at the very beginning of blockchain and cryptocurrencies. Bitcoin is likely to continue to be the dominant gold equivalent, kind of this store of value, but the most exciting and likely effective and impactful platforms are going to go far beyond, a digital gold paradigm.
And it is these next generation technologies that allow applications layered on top of the blockchain that is commonly referred to as DeFi, decentralized finance. Can you just maybe describe that term briefly?
Sure. So DeFi, decentralized finance, is basically the ability to do all the things that we would typically do through some sort of a bank or a financial service provider. So an insurance contract, a loan, collateralizing an asset, finding out somebody's risk profile, all those services that we would find in traditional financial institutions can be managed through open protocols and these decentralized networks of people that make up that particular system. So DeFi is trying to expand into a full service offering, not just trading coins back and forth, but taking out a mortgage, and who's providing you with the contract, and who's providing you with the funding. Where's the liquidity come from? It comes from the network, not the bank. So it is essentially, DeFi shifts us from institutions like banks, and it pushes us towards a world where the network itself of individuals becomes the source of financing.
Mm-hmm. And it is in this realm, I think, that to a large degree, these emerging technologies around cryptocurrency and blockchain have real potential to impact like the business of global development and also outcomes in global development as well. The people who listen to this podcast, they are not of the crypto community. They are of the global development community. And it's sort of my intention with this conversation to try to bridge the two a little bit. And so I would love to just kind of chat with you through some potential opportunities or scenarios for how cryptocurrency might impact global development. To me, at least from what I have gathered, from when I've done a little reporting on this, the lowest hanging fruit seems to be in the transfer of remittances. As I think many of my listeners will know, remittances are orders of magnitude greater than what is given in official development assistance from one country to another. Something like $700 billion are sent in remittances every year from wealthier countries to poorer countries, compared to about $160 billion in official development assistance. Yet, so much of this money is trapped in high fees associated with sending money across the border, to the degree that the Sustainable Development Goals even include targets to reduce transaction costs associated with remittances to under 3% by 2030. One thing that's, I think, just absolutely fascinating about cryptocurrencies, among many other, is how cheap it is to send money across borders. And I'm curious to get your impressions on the potential of cryptocurrencies to reduce transaction costs, but also become like a sort of a meaningful platform for remittances.
Yeah. So remittances they're widely discussed as that great use case. In order to do that, you need a few things to come into alignment. One is the availability and the adoption of what are referred to as stable coins. So with typical cryptocurrencies like Bitcoin, Ethereum, Cardano's ADA, and a number of others, the value of those coins goes up and down. It will make large movements up and down, and really, the value of those platforms is really much more as of a liquidity pool than a company, right? So we don't need to worry about the volatility because it's early stages and that's volatile. Stable coins are pegged against either traditional fiat currencies or a portfolio of other cryptocurrencies, or they're algorithmically managed to always be the same value. So stable coins are in the early stages of kind of its development, but they are receiving, I would say, an outweighed amount of attention from regulators because they represent a pragmatic way to do remittances that gives you all the benefits of cryptocurrency: the instant settlement, the assurance that it's going from this person to this person without the volatility of the prices going up and down.
And the low fees.
And the low fees. That essentially very low.
It's like a fraction of a percent compared to, say, 8% to send remittances to places in Sub-Saharan Africa.
Yeah. So in order to do that, we need to address the regulatory barriers in terms of the Know Your Customer KYC and the anti-money laundering, the AML processes that are currently followed by the folks that handle remittances today. And then you would also need some sort of agreement within that home country that recognizes stable coins will be coming in as an inflow, and individuals within that society then have a choice to convert those stable coins into the local national currency, or maybe they use those stable coins to purchase things as they would through any digital currency. So you need all sorts of things to align. And for me, the big thing here is identity, and the ability to link identity to these types of payments is going to be, the critical enabling force.
Can you flesh that out a little bit?
So the people that launched Bitcoin and kind of the cryptocurrency movement tend to have a strong kind of libertarian ideology that kind of drives their pursuit, right?
Yes. I should say I do not.
Yeah, but, and I sit on the side and I watch, right?
Yeah.
But they are not interested in empowering governments or empowering banks or empowering institutions. So privacy and the ability for someone to do a transaction and not have to link their identity has been paramount. Now, that's the early wave adopters. When we go into the early mainstream adopters, those are likely to be individuals that value identity, that say, I do want certainty that this money belongs to me and I want to link my identity to it. Or this is the person that sent me the money, or this is the person that I'm sending money to. So it really is just about the transition from early adopter to early mainstream users of cryptocurrencies as kind of the milestone to watch.
And this sort of leads into like a next sort of set of questions, particularly when we're talking about the developing world. There has been this goal among the global development community for as long as I've been covering this stuff, since like 2005, to bank the unbanked. And the potential, it seems to me, of many of these technologies to provide some financial identity to people who currently lack it seems profound and potentially like very impactful in places where it is hard to get a bank account.
Yeah, and this is the other large group that you see within the cryptocurrency world, outside of that, the kind of libertarian bent, are individuals that have a strong social mission orientation, and that this idea of banking the unbanked is what drives everything. Now, how do we do that is the big question. And again, I would argue that the two things that you need to accomplish this are, first, connectivity. Individuals need to be able to connect to the internet. They need to be able to connect to digital infrastructure. And in our world today, that is primarily through, Wi-Fi and kind of, fiber into a wireless form factor, generally to a phone. So there are now organizations such as World Mobile that are looking to connect the unconnected in order to bring these DeFi and these crypto banking solutions to those populations. That's the first piece. And then the second piece is, again, economic identity, that individuals are able to prove who they are and only show aspects of their identity that is needed in order to engage in some sort of financial contract. So I control my identity. I don't need to reveal everything about my world to you. I am only going to reveal the information that you need in order to trust and move forward in this transaction. And that idea of economic identity is now starting to take hold, right? This idea that a major use case for blockchain and cryptocurrency is around supply chains and being able to provide economic identity to small farmers that can then prove that they own a certain amount of land, or they can prove they have certain animals grazing or crop yielding agricultural practices that they prove and that they can then collateralize. They can take a loan against it. And that idea of economic identity baked into supply chains is where I expect the real momentum to pick up in the years ahead.
Well, can you maybe run through a few other examples of that and how that may work in the coming years, particularly as it applies to the developing world?
Yeah. So one of the ideas that you hear, again, within this kind of social mission oriented strain of the crypto community is this idea of kind of a decentralized Kiva, right? So Kiva is a kind of a classic microloan, kind of a peer-to-peer platform where I see somebody wants $200 to buy something that they will then produce income from, and I give them $10, and we get a bunch of other people and they give $10, a small amount, and they fund the project, and that loan is then repaid over time. So that model of Kiva works and scales to a certain degree.
I've had the founder of Kiva on this show in the past.
Fantastic.
Yes.
Yeah, fantastic. So what if we are able to really expand that model and to overcome some of the barriers associated with that type of individual to individual giving? And the first one is verification of identity, that I trust that the picture of the woman that's on the profile page of this loan is the person that's going to receive it. And that type of decentralization of identity and risk modeling would come from the blockchain world and would help lower that barrier to someone giving. And then blockchain and cryptocurrency, as you said earlier with remittances, it reduces all the friction of the transaction. $10 and know that, $9.50 made it to the person, and neither of us got stuck with fees. So how do we decentralize that idea of individual to individual giving? And if we do, could we imagine a great transfer of wealth and relationships between individuals across the world?
I mean, so beyond like individual to individual giving, like that micro lending model, it seems like the kind of great white whale in all of this is unlocking access to capital for small and medium enterprises. These are companies, corporations, sometimes formal, sometimes informal, that make up most of the economic activity in emerging economies, particularly in sub-Saharan Africa. It's like something like 40-50% of the GDP of sub-Saharan Africa comes from small and medium enterprises. And, I was reading a World Bank report the other day saying that there's something like an unmet need for capital at like over $5 trillion around the world for SMEs as they're known. And the fact of the matter is it's just very hard in many cases for small and medium enterprises to, get traditional loans. And if they are able to get traditional loans, the fees are the interest rates are usually extremely, extremely high. So could you, foresee a situation or a future in which these enterprises have access to capital through decentralized finance, through these decentralized banking systems that cryptocurrency enables?
Absolutely. For me, that would be stage 2, right? Stage 1 is that it feels good. It's the, again, the decentralized Kiva model, peer-to-peer, and that can really change lives. But stage 2 is large institutional money that wants to find yield, that wants to find growth, can now say, look, we haven't been operating in certain regions of the world because the cost of kind of customer acquisition is so high. We can't verify that this SME, that this person that has a small business actually owns the land, that they own the equipment, that their books are valid. The cost of that acquisition is very high. It will take time, but it is so clear to me that stage 2 is the decentralization of larger loans, larger financial solutions. So I would see the SME financing coming not from individuals, but from larger traditional banks that are seeking growth in these regions.
This is enabled because of the verification that the technology provides. You mentioned land titles. Presumably, land titles are some things that could be digitized and verified across, blockchain.
Yeah, and this is a current focus of different communities, and particularly in Africa, to be able to empower individuals to verify that they own their property, which again allows them to then take out loans. It allows them to, improve that property, is a major use case and focal point right now.
So I want to have you, before we go, discuss barriers to this vision and this idea that we've discussed. But first, to your knowledge, like what's happening in this space as you describe it, particularly in terms of entities or organizations that are actively trying to harness this technology for global development. For example, I saw the head of the third largest cryptocurrency by market cap tweeted out that he's traveling through Africa, meeting with various heads of state in Burundi and Kenya, in Egypt even. So it seems there are people that are like focused on this. Can you map that world briefly?
Yeah. So, big picture, what I think is happening, we're still stuck in the first phase where we think that the wealth creation in cryptocurrency is going to come from owning the coins, having the coins go up in value and selling the coins. Speculation versus the social wealth that is going to be created in cryptocurrencies will be because cryptocurrencies and DeFi and decentralized identity exist. Right. And the analog for people that are kind of, what does that mean? Remember the dot-com bubble of the late 1990s. When the internet came out, everyone thought that this internet was so cool, so fascinating. And they thought the way to make money with the internet was buying the stocks, the dot-com stocks. It turned out 15 years later that the wealth is created because we have things like YouTube that allow us to have our own video publishing platform. We have payment solutions. We have access to delivery networks. So the wealth was created not from the dot-com stocks, but by having the internet itself. And we're still stuck in that first stage. People don't see that having decentralized identity and finance is going to generate wealth. We're still stuck on own the coin, make the money off the coin. That will happen over time. So that's kind of my big picture take. Where do I see things happening right now at the leading edge? It is around this idea of empowering governments. So, the project that you're referring to is working with governments across Africa to not necessarily bring cryptocurrency solutions. Like, they're not trying to go in there and say, we're going to bring in a digital currency to replace whatever you've got. They're coming in there and they're saying, we're going to bring identity solutions. We're going to bring identity solutions that allow your high school and college students to, take their classes, get their degrees, have their credentials verified on a blockchain. And then when that person wants to get a job for a company within your country or beyond those boundaries, they can use those verified educational records when they're talking with potential employers and improve the likelihood to get that job.
And you're referring specifically to a project in Ethiopia that was recently rolled out.
Yeah. So this is a project between Cardano, which is a cryptocurrency platform, and the Ministry of Education in Ethiopia. And then the other big one is this idea of, again, working with governments, of issuance of sovereign bonds. So if you go out 2 to 3 years, maybe 5, if I'm being a little bit optimistic, you can imagine that a nation state will use a blockchain cryptocurrency stablecoin to issue their own bonds. So they want to raise, US dollar equivalent $200 million to build some roads or universities or a healthcare system, rather than going to a traditional, kind of Wall Street, London, Paris-based financial giant to issue those bonds. They can do it themselves. And when they issue those bonds, they can know the identity of who owns those bonds. And they can assure people outside the country that these bonds are owned by legitimate individuals, and that the transparency and accountability associated with that sovereign debt issuance will exceed what I think exists anywhere else in the world. So, like, what's the big prize for me? It's this notion of sovereign debt issuance over a blockchain. When that happens, we'll be in a new era.
And so what barriers do you see from here to that era occurring? I mean, this is a very deeply unregulated space. There is a lot of, I think to a large degree, deserved, reputational damage associated with Bitcoin, and just generally like meme coins and irresponsible speculation and all that. Like, what are some of the barriers to that widespread adoption that you're referring to?
Well, I think the biggest barrier is just regulatory uncertainty. So we are at a point where the technology itself is good enough that these solutions can be rolled out over the next 1 to 3 years. There's no longer a question of, can these blockchain networks scale? Can they handle hundreds of billions of dollars of transactions? Yes, they do. They can. Can they do it without, ever going down and being, hacked? Yes, they can. So it's not a technology barrier. It really is about regulatory certainty, and that is coming. It's coming from different nation states, and I would expect that the next 2 to 3 years will be an era of the first wave of regulations that allow governments around the world to use blockchain and cryptocurrencies, and allow institutions to integrate these systems into their services. So I don't really worry about the individual that's trying to buy and sell crypto. I really am more concerned about, when will governments and enterprise have the regulatory certainty to join in? And I think that's about 2 to 3 years away.
I am of the development community, not of the crypto community. Is there any other sort of technologies on the horizons that you think may be more potentially impactful that we didn't mention or discuss so far?
So there is this idea of kind of Web 3.0. So Web 1.0 was just like a publishing model, right? We had publishers that created websites and pushed out. It was like a read-only web. And then Web 2.0 was more about interaction, this idea of user-generated content, a social network, right? The platforms emerged and they controlled the code. They made the money. And now out of this blockchain crypto world, we're seeing this call for Web 3.0. And, it's easy to bat your eye and see it as a buzzword, but there is something about Web 3.0 which moves us to a new way of thinking about ownership. And the shift is from platforms owning the content and monetizing that content or the relationships to a world where these protocols, these crypto protocols, are open to anybody and allow individuals or governments or companies to create, produce, and profit from the content.
And what would be like an example of something like that?
Well, you're basically.
I'm having a hard time visualizing. Well, I lived through Web 1.0. I've had a blog since like 2005. I'm on Twitter, Facebook, all that stuff. Like, what's this third iteration like?
So it's basically like a Facebook without Facebook, right? Where, just take the Web to 1 to 2. Like, if you were a major media company and you had just built this big website, and then someone comes along from the Facebook team and they're 28 years old and they're like, we just built this platform and people are going to take your content and we want to bring it into our feed and they're going to like it and share it and comment on it. And you're the big media company. You're thinking, no, they're not. Like, I'm not going to I just spent all this money on my website. I'm not going to give you access to this content so people can like it and share it. That seems ridiculous. So that happened, right? And now what we're saying is creators, when anyone creates content, they are going to manage the monetization of that content. So, the big mental shift is people aren't just going to, manage their social media profile. They're going to be managing their lives as a business in this Web3 era. So they're not going to get a check from YouTube, right? The money is going to come from the users and the viewers directly. So it cuts out that platform. It's a world where we have media networks that are not controlled by a central company. So it's, who knows what it's going to look like, but it's essentially kind of a YouTube without YouTube, a Facebook without Facebook.
Well, Garry, thank you so much for your time. You've given me a lot to think about. I appreciate it. I really do see potential for this technology to be impactful in emerging economies in the developing world for many of the reasons you cite, which is why I wanted to have this conversation. And I really kind of consider this to be like the start of a conversation between people of the crypto world and of the global development community, get them to talk and to learn from each other a little more and a little more deliberately as well, because of the potential use cases that you cited and more that we haven't even sort of thought of yet. So thank you. Yeah,
absolutely. Can I throw one more out there just for folks to go down the rabbit hole? There's a project called Empowa, so EMPOWA, and this is not an endorsement as much as it is just a illustration. It is a DeFi property platform. So imagine being able to create new sources of funding and distributed sources of, again, risk profiles, et cetera, to allow people to buy and own their own houses. So Empowa is a DeFi kind of affordable housing effort based right now in Africa.
And you would imagine something like that could be transported from the developing world to the developed world as well, which is really interesting. Absolutely. And, just like M-Pesa, you think about that as like the classic example of the developing world innovating due to constraints within, their economies and that being sort of transported abroad as well.
Yeah. So it's fascinating times.
All right. Well, thank you so much, Garry.
Thank you very much.
All right. Thank you all for listening. Thank you to Garry Golden. And I hope this encourages you to become a premium subscriber to this new cryptocurrency and global development newsletter and podcast series. If you become a member now, you can unlock access to some new episodes in this series, including my conversation with a social entrepreneur from Burkina Faso who is creating this platform to register land records on the blockchain in order to, among other things, let farmers take out loans against their property. I also have published a conversation with a social impact cryptocurrency platform created by a Zimbabwean fintech entrepreneur seeking to provide affordable housing in Mozambique. And of course, there will be many more episodes to come. I've recorded several that are in the hopper, ready to be released. Please visit patreon.com/Global Dispatches to access this series. Thank you. Let me know what you think. See you next time.